Introduction to IFRS 15. Welcome to this training session on IFRS 15 revenue from contracts with customers. This standard is the global framework for revenue recognition and has replaced IAS 18, IAS 11, and multiple other industry-specific guidance notes. Evolution of revenue standards. Earlier, revenue was governed under different standards. IAS 18 for general revenue, IAS 11 for construction contract, and guidance notes for real estate, oil and gas, retail, and software sectors. With IFRS 15, we now have a single, unified model that applies across all industries. Alignment with global standards. IFRS 15 was officially applicable from the 1st of January 2017, and aligns with ASC 606, USGAAP, IND as 115, India. This creates global consistency in recognizing revenue across jurisdictions. Key principles of IFRS 15. IFRS 15 is based on a 5-step model. Identify the contract with the customer. Identify the performance obligations. Determine the transaction price. Allocate the price to performance obligations. Recognize revenue when or as performance obligations are satisfied. This model ensures that revenue reflects the transfer of control, not just the transfer of risk or rewards. Industry examples from previous standard. Before IFRS 15, different industries followed different rules. Office building, real estate, IFRIC 15 oil drum, oil and gas, IFRIC 13 retail, IFRIC 18 software. Technical guides. Now, all industries follow a single revenue model, making accounting more comparable. Special focus, non-monetary exchanges. IFRS 15 also covers non-monetary exchanges and barter transactions, such as advertising space for services, asset for asset transactions between entities. These require estimation of fair value, and revenue must be recognized only when control is transferred. Complex consideration. Additional guidance is also provided under IFRS 15 for variable consideration, repurchase agreements, sales with customer credits or discounts, barter transactions. These topics are crucial for entities with bundled offerings, loyalty programs, or refund policies. Transition and implementation. IFRS 15 was introduced with optional transition methods, including full retrospective. Modified retrospective implementation required a cross-functional effort involving finance, legal, sales, and operations teams. Summary and key takeaways. To summarize, IFRS 15 provides a consistent and transparent revenue model, global comparability, enhanced disclosures, better alignment with business practices. Whether you're in manufacturing, IT, retail, or construction, IFRS 15 is the global benchmark for revenue recognition. Thank you for watching this module on IFRS 15 revenue from contracts with customers. If you found this helpful, do like, share, and subscribe to our channel for more finance training content. Drop your questions in the comments, and don't forget to check our detailed examples and case studies in the next video.